JP Morgan coming out and saying that the last big hike that you're going to see from the Fed is going to come through in September, and then they're going to start to ease off, and that's going to prove supportive for equities. What is wrong with that call from JP Morgan?
Well, that would be a great outcome if indeed the Fed stops hiking in September. We have a bit more hawkish reaction function of the Fed going all the way to 4.5% into the next year. But absolutely, more dovish central banks would be very, very welcome by the equity markets. But I think still there is a lot of worries that inflation is going to continue to be sticky, and perhaps the central banks have to hike as much as they can while they can before the recessionary environment hits us.
Yeah, 100%. Lynn, I mean, I guess this is why markets are maybe, pausing ahead of that Jackson Hole speech by Jay Powell, is how aggressive can they be in this kind of environment?
Yeah, I mean, I think clearly the mantra from the Fed has been they're going to do what it takes to get inflation under control, and markets are now repricing, that hawkish sentiment. I think, the move you saw before was people starting to think things might be better than expected, that they'll start to pivot and be more dovish. But I think what you can see in the action of the past week, it's clearly the opposite.
And Beata, how do equity markets react to a new inflation dynamic if indeed we get to a point where we're never going to be back to 2%, where it's more like 4%, 5% in terms of entrenched deflation across these economies? What is the equity market reaction to that longer term?
I think we'll have to adjust to the new reality that it's going to be higher inflation for longer, right? And as long as the central banks are not going to stick to their lower than that inflation target, some inflation, we've been longing for inflation for the last decade, right? Not as high inflation as we have, but if it stabilizes around 3-4%, I think it will be okay for the equity markets to take it in.
Beata, what are you buying right now? Is there anything that you trade with conviction?
So I am worried. Well, I wouldn't be buying into the rally. I worry that the rally has gone a bit too far. I'm bullish on equities over longer term. My targets are positive over the next 12 months, but the markets don't go up in straight line, right? So I worry that there is bad news ahead before the good news. So the portfolio, I prefer the UK over the continental Europe. Within Europe, because I am more tilted towards value, and I think if there is this risk of more hawkish rhetoric from the Fed, from the central banks, then I would be particularly worried about growth, but growth cyclicals the most. So what I've done last week was to downgrade parts of growth cyclicals that have done very well in the rally. So industrials, retailing, I'm already underweight chemicals. So I do worry that if recessionary worries start hitting the market starts realizing them, these parts of the market have the most to lose.